and welcome again. Thank you for joining us. Welcome to the Weekly Tax Update with John Sheeley. It is May 8th, episode 122. And what a great week it was. I spent Monday, I drove down to Washington, D.C., and I was in D.C. Tuesday, Wednesday for the NAEA fly-in day, and I came home late last night, and it really was a fabulous week this year. And some of the things we talk about today are going to be NAEA type stuff, just stuff that I learned, not NAEA stuff. So, of course, this is me in the middle of the night putting the weekly thing together. 30 years I've been around. Actually, it's almost 40. I'm getting to be old. If you need me, scan that QR code. That'll populate my information into your telephone, and I would be very happy to speak to you otherwise on anything you need. Kwang and Abdo, you're getting tired of it. It's important. It's the most important thing this year. So if you haven't watched the video, it's on demand. Please watch it. You can earn 2 continuing education credits from it. That's rare for Frank. Usually it's 3. He's being asked to speak on this everywhere. It really is something important to tune into. And if you did tune into it already, we've been updating his content. There are now, I think, 9 articles related to the handouts, like 450 pages of content. You don't need all of that. Trust me, it's the segments you need. You want to grab. He was asked, he was told that he had too much content. So I think number 9 is a high-level recap. So you might want to connect in and grab that item. If you can't find it, email, call us. We'll get that over to you. Subscribers only can join us for AJ Reynolds for the 250th anniversary mid-year tax update. America's 250 years old, must be our 250th mid-year tax update. So he's coming out at 1 p.m. Eastern, run for 3 hours. Great way to kick off your 4th of July weekend this year by watching AJ. Through the end of May, catch the 2025 prices for the 2026 International Tax Conference in New York City. Most of these folks have spoken for us previously. They've all spoken for us previously, and they are back this year with exciting new content. Rita Ryan, Andrea Valois of American Expat Tax Services, Frank Agostino, Marina Hernandez of Swiss American Wealth Advisors, and I'll be there a little bit as well. Please join us. Monday night, we have a rooftop bar experience. I'm going to put some photos of that up that we do every year. It's very popular, and we'll do some other things together that you'll enjoy. If you're not a subscriber, you really should be. Catch over 30 hours a month now of content. The next 4 months are at about 35 hours each. There's so much going on. It's packed. Members also get the AFSP program if they need it. All the updates in December, including 8 hours of federal tax update, plus all the various states we do. Our annual ethics program, and over 300 hours of previous programs that are available on demand for education credit. This week, my pleasure to have been in Washington, D.C. To participate in the fly-in. Tuesday was a full day of legislative updates, hearing from stakeholders at the Internal Revenue Service, and preparing us for our conversations with representatives, congressional representatives, and their staff on Wednesday. It was actually mostly their staff because Congress is not in session this week. You can see on the upper right-hand corner, that's Frank Bisignano, IRS CEO, and me. So that was a highlight, getting a picture with the CEO. He was a very generous individual that he took pictures with everybody in the room who wanted one. Busy guy, 4 huge Secret Service looking, but I think it's IRS CID security personnel with him, and off they went. A couple of shots in there, too, of me at various congressional offices. We did stop at Claudia Tinney's office, and we got a picture of the Buffalo Bills stuff she has there. It's Mark Dombrowski's representative. He should be ecstatic. IRS has updated things through May 8th today, so I've got current numbers for you. The most embarrassing thing in the world, Form 14039, 19 months behind. It's just embarrassing that it's taking the better part of 2 years to get folks cleared up on their identity theft applications or identity theft affidavits. Business isn't much better. It's just terrible, and it should be a number one focus of the taxpayer advocate and everyone else, and you too. You should be mentioning this whenever you can. I know I certainly mention it every time I can, to the point that folks are just tired of hearing me talk about it. IRS has processing of original returns that were electronically filed within 21 days. Original returns are currently processed through April of 2026. Amended returns, they are working on March of 2026 returns. Again, the big caveat here is these are returns that don't require additional processing or special handling. They never give us a description of what the special handling is. I think they spend a lot of time and a lot of returns get dumped in here. Business returns electronically filed, 21 days if they don't need special processing. Paper originals from March of 2026, amended returns from September of 2025, 1041 forms similarly processing February of 2026 returns, but amended returns from September of last year are being processed. Power of attorney forms, 5 days. 5 days on the upload for a 2848, 5 days on the 8821 faxed, uploaded. I checked this morning. Things that I sent over the weekend before I left, updated today. So they're on target for the 5 days. A couple of things that are going to be coming up, don't forget, is we have the federal holiday on June 19th. Juneteenth. It's a Thursday. So I think some folks are going to take a long weekend out of that. We'll also be coming up on the 4th of July weekend. That's one of those crazy weekends. Everybody takes time. Some people take it before, some people take it after. So I think that 5-day number is going to go back up. They're going to lose at least 2 days, but couple that with all of the Kwong versus Commissioner powers of attorney and 8821s coming in, I think you're going to see that number go back up to that 15 or 20-day backlog, unless the IRS has realigned personnel in anticipation of it. I think they might. Everything else here, ITINs, residency certificates, those are the dates we expect. 1045 and 1139 processing, that's quite impressive that they're processing stuff submitted this year. SS4 information, 5 days right now on fax submissions. I say this every week. We've always had it that we call 1 week later when we have to fax in the SS4, and they always have the number available for us at that point. Maybe during COVID they were behind occasionally, but not really. General correspondence, also a little embarrassing that they're a solid 90 days behind on any individual correspondence. They're back in September on business correspondence, and anything else that doesn't fit neatly into either one of those silos is an October of 2025 submission. So I have 3 big things I want to talk about this trip through. So TIGTA dropped a Treasury Inspector General for Tax Administration, dropped a report on improper claims of the Earned Income Tax Credit. I've been doing this for 40 years. I've been hearing about improper claims. You got it. For 40 years, we hear different numbers. It's a complex subject for something that's supposed to be so simple. The working poor with children should get money. Simple system. It's complex for the folks most needing the help, have the least amount of money probably to get these things straight. Depending on whose numbers you look at, the IRS, the General Accounting Office, the National Taxpayer Advocate, the numbers are all over the place, but a quarter to a third are probably wrong one way or the other, and that's concerning. So improper payments, what's the scale? What's the scope of this? Fiscal year 2025, that's the year ended October 30th, 2025 for IRS purposes, federal government purposes. $64.7 billion of earned income tax credits were paid, transfers of payments. They estimate 33% were improper. Now, non-citizens not authorized to work, but needing benefits access, get Social Security numbers. They call this a non-work Social Security number. 2.4 million of these Social Security numbers are in circulation as of March of 2025. Remember, they're running a year behind, right? This is last fiscal year. So Social Security numbers that are issued solely for federally funded benefits are not valid for EITC. We're supposed to look at that card. It says right on there, not valid for work authorization. Guess what? Not valid for EITC either. So this is baked into the purpose of the issuance. Sadly, in the prior fiscal year, 67,000 returns claimed the credit using Social Security numbers they shouldn't have used. They claimed $219 million. Oops, we paid out $213 million of it. This is driven by data limitations. They should be able to do a better job. They're not sharing enough data. The IRS doesn't have a mechanism to filter these claims at the filing stage. And I want you to think about this. They can match, was the dependent already claimed? They can match last name and Social Security number and date and year of birth. They can't match names that are on the blacklist. That doesn't seem reasonable. It seems like a dollar in a dream. It seems like they could code this in. The service is unable to identify these Social Security numbers before the credit goes out. They're not identifying it during the process. So there's a missing reason code. Social Security collects the reason for issuing a non-work Social Security number at the time of the application. The IRS employee plugs this into a drop-down field. Apparently, that code isn't included in the Social Security data that transfers over as shared with IRS, right? So we were always told the IRS connects to the SSA database and verifies the name, year of birth, all that stuff. So without that reason code coming over, the IRS can't distinguish it. So what's that going to cost? It costs them $10 million, let's see, to code it. Oh, they'll get that money back by January 20th next year, right? This is something they need to do. A federal benefits only Social Security number versus an other purposes Social Security number that's potentially eligible. They got to figure this one out, right? This seems like an easy one to figure out. Now, Social Security number data is static, eligibility isn't. The Social Security number won't change. The data associated with it won't change. But eligibility, that might change. I worked this year. I didn't work that year. So Social Security data reflects immigration and work status, but only at the time we issue the Social Security number. Doesn't reflect subsequent changes or work authorization updates. Very interesting. We only know why we issued you the card. So if you, as an example, if I'm here as a student, foreign student on an F visa, I get a Social Security number. That number is good for my life. If things subsequently change, I become a citizen, I get a different visa. That data does not get updated into the Social Security database. Maybe it should. So the IRS really can't rely on Social Security data to determine the current eligibility. Maybe they should. So the risk is going to cut both ways here. Either they're going to pay ineligible claims or they're going to incorrectly deny eligible candidates, eligible claims. So status changes may make a non-work visa holder later eligible. The static data is going to mask this. So they have to figure something out here. There's no way to share this data across all the agencies. You think this day and age there would be. So eligibility updates require the taxpayer-initiated action or consent-based data sharing. So they need an interagency agreement to say, yeah, we're going to share this back and forth. So for March of 2025, there's an executive order, 14243, that directed elimination of agency silos. We're Big Brother. Let's act like it. Let's share everything. Well, that cuts both ways, too. We had that issue earlier with the Department of Government Efficiency looking to access things that maybe were an overreach and maybe violated certain things, right? So the agencies were colliding a little bit. So real-time EITC eligibility verification capability doesn't exist. They need to do some things. But you also don't hear anything negative or dangerous here, right? Why do you have that Social Security number? What's your current status? we could update a 1-digit code, right? Why you have it. And so it sounds like we could save $250 million. That's some real money simply by programming this and sharing data that otherwise seems to be beneficial. So Section 6213 has math error authority. It allows the IRS to automatically do a bunch of things, including disallow certain improper credits. And if you watch the class, Steve Mangiamelli, I think, did it one year. PK did it this year. Math authority notices have due process. So if I don't like what they did, I can get representation. We can handle this. But theoretically, this is applicable to EITC claims that have a non-work Social Security number. You're not eligible for the credit based on its face. Based on what we know, we can reverse it off and not pay it to you. So we don't do this at scale. The data they think is unreliable and incomplete. Now, an interesting study would be, this is my opinion, an interesting study would be to find out 5 years after issuance, how many of these folks have changed their status that they are now eligible. It's possible 90% haven't changed status. Maybe we can implement this. If 90% have changed status, maybe we shouldn't. We need more data before they can even make a determination. IRS can't automate the systemic denial at this point. So it defaults to the famous pay now, audit later enforcement posture that they do with everything else related to these credits. So they have an automated questionable credit program. There are risk-based filters to identify high-risk EITC returns. So in the last fiscal year for which data is available, not the year ended last October, the year ended before that. So we're talking about mostly 2023 returns filed in 2024. They flagged 12,600 returns and reviewed 5,100 of them, 40%. 90% of the ones that they reviewed were disallowed, saving $11 million in revenue. Now, Mark Dombrowski would remind you, why does Criminal Investigation Division have a 100% conviction rate? Well, they kind of have limited ability to do things. So they choose their cases, they choose wisely. So here, are they choosing, after we've narrowed down the most likely, are we now saying, we can only look at so many, we can only look at 5,000 of them. Which are the 5,000 most likely? Let's look at them. And then they're finding out that 90% of the most likely were in fact fraudulent. So what percentage of the whole 12,000? It seems like it would be a cash flow positive, if you will, that they should look at all of these if 90% of the ones they looked at randomly were fraudulent. TIGTA thinks there are about 35,000 returns that weren't captured by the existing filters. Now, TIGTA does audits like financial audits. They do all the math. They do everything the way they're supposed to, including making sure that they are choosing a truly random sample, is the statistical term, random sample of stuff. So if they're extrapolating to 35,000 more, they're probably close. So the coverage gap here is large, though. Even with a 90% disallowance, the majority of potentially improper claims aren't even being reviewed, much less stopped. So there's about a 15% staffing cut, which is limiting the capacity of this unit. We've heard this before with the automated underreporter and other units. We are aware of a whole lot more. There's nothing we can do about it based on our limited resources. So the IRS has been updating these risk filters. They implemented new ones back in January. We don't know yet. TIGTA will probably go back and tell us what happened here. Manual review, though, 90% are accurate, but only 40% of the flagged returns were reviewed. So we protected $11 million of that 213 they fraudulently paid out. So non-citizens, clients, and Social Security numbers with restricted work authorization history. These are the ones that are scrutinized. We should be catching these because you're supposed to look at those cards, right? New clients, you're supposed to look at those cards, ask questions. Document the eligibility. Key intake question. Why was the Social Security number issued? The IRS is finding that that is absent from client files during these audits. Now, this would be interesting. I'm going to share this, if he hasn't seen it already, I'm going to share this over with Jason Dowtry, because I wonder if some of the practitioner representation cases he does are issues like this, where there's a large number of these returns. Current work authorization does not cure the ineligibility because that data currently isn't shared. I know I put you to sleep with this. I'm so sorry. So speaking of being put to sleep, let's talk about Kwong one last time. National Taxpayer Advocate got into the Kwong effect this week. So there's a 3-part blog series out there on COVID-era penalties and interest assessments and how they're wrong. Tens of millions of taxpayers probably qualify for refunds. To me, this sounds like, did you pay a penalty during COVID? You might be due compensation. It just sounds like a bad TV commercial. I haven't heard any yet in the radio either yet. Affected categories are everybody. Anybody that files a tax return. July 10th is the dates as of right now. Are they going to extend it? Are they going to tell us to hold our horses here and that they're going to figure out how to automate this? We have no idea. But right now, you want to plan on getting that paperwork in by July 10th. Right now, there's no systemic relief program, and I didn't get a chance to ask anyone if they were going to look at a systemic program. Just basically, Kwong was a court of federal claims decision. That's where I sue for a refund. So the argument here under 7508 capital A, D in a bucket, was did or did it not mean that a federal disaster declaration automatically postpones tax deadlines? The answer was it was supposed to. It was supposed to suspend make uniformity, suspend any federal disaster. The due date of anything that fell during the disaster would be 60 days after the end of the disaster, right, when it was declared done. So with COVID, you have to give 60 days notice because it was a national disaster. So they declared on March 13th or so that it was done. That meant that roughly May 13th, it would be done. So 60 days from May 13th is July 10th. Court said, correct, penalty and interest assessments during the window would be improper. They probably shouldn't have been assessed, and the IRS should not be collecting them. The IRS didn't concede this, but the Department of Justice has not appealed it. We have no idea what's going on yet. Timeline here, if you want to take a look, but again, deadline July 10th. This is the next National Taxpayer Advocate saying this. The one thing I've been saying to everybody is, whether you want to file these or not, you got to tell your clients, make sure any return you touched during that period is aware of this. Make sure your current clients, even if they only became a client in 24, 25, tell them, by the way, this exists. Did you pay a penalty? And if you don't want to do the work, tell them, I'm not doing the work, but I want you to be aware of it. There's plenty of places out there that are, in fact, doing the work for non-clients. There's plenty of automated tools out there, do-it-yourself tools that are low cost. Folks can get access to this. Failure to file penalties should be abated. Failure to pay penalties should be abated. Most likely, estimated tax and underpayment penalties should be abated. Why? Because nothing was due after January 20th, 2020 until July 10th, 2023-ish, depending on how you calculate it. So I could have paid all my tax on that date. I paid it earlier, good for me. There should have been no 2210 penalties. There's probably improper accrual and interest and overpayment issues. And then probably, but not certainly, Form 5471, 5472, 3520, 8865 late file penalties probably should not have been assessed. Isn't this great? Now, the IRS has not adopted the interpretation. There's no concessions, no agreement. We think it's going to get appealed. No systemic processing in place and no guidance yet. We keep checking. no notices, no revenue procs, no frequently asked questions, saying that we're going to do automatic relief, saying that we're giving everybody some extra time. So you're talking potentially millions and millions of these forms getting sent in. It's insane. Somebody who had quarterly payroll tax that was late for 4 quarters has to file four forms 843, one for each quarter involved. Waiting for IRS guidance, on the one hand, I think that's a high-risk strategy. But, during COVID, how many times did folks sit back and say, yeah, they're going to give me relief, right? That whole unemployment thing, right? Yeah, they're going to give me relief. And they did. I don't know that I would play that this time. So we keep talking about protective claims, and there have been some questions. So real quick, what's the difference between a formal refund claim and a protective claim? Formal refund claim is I absolutely know what my refund is. I didn't claim my one child who's 20 years old. My refund is $500. Let me my child tax credit. Let me my other dependent credit. Sorry. Let me file and get my $500 back. The entitlement is clear, right? That's the law. I can read it. The IRS will have to give me that money or audit me, tell me no. When I file this, it starts a 6-month waiting period before I can file district court. So we wait 6 months, and if they don't pay me, I have the choice of suing and saying, give me my money. I think it's supposed to be $10,000 or more if you go to the Court of Federal Claims. There's some difference between these two guys. I always think when you talk about this, I think about the guys from Smokey and the Bandit, because they talk about Little Tucker and Big Tucker Act, Little Tucker claim and Big Tucker claim, and I think of Big Enos and Little Enos from Smokey and the Bandit. I know it makes me old, right? But that was a funny movie when I was a kid with Burt Reynolds. Protective claim is I might be getting something, but my statute's about to expire. What we last saw a large number of this in the California versus Texas case, where we thought that could unwind large portions of the Affordable Care Act. And if that did happen, it was possible that it would also disallow many of the funding mechanisms, which included the 0.9% additional Medicare tax and the 3.8% NIT. So if you remember, we were writing letters for asking people if they wanted a letter and then sending certified letters that, hey, by the way, in the event this case is successful, I might be entitled to a NIT. I want you to keep this tax year open only with respect to the NIT until we get a resolution of a final resolution of California versus Texas. I don't know the precise amount. I just have a good idea. And it's when we're uncertain if we can do it. And it becomes file now, argue later. My concern is if you don't tell your clients, the argument later becomes, well, I certainly would have gotten an abatement check. Therefore, it's John's fault. So we want to make sure everyone is aware of it. If they don't want to pay you to do the work, too bad, so sad. But make sure they're aware. This is all on the National Taxpayer Advocate's website. Form 843 gets filed. It's only available right now as a paper filing. We have all the usual IRS processing issues. I suspect they're going to pile, if it's a Kwong claim, they're going to throw it in a box and wait until something happens because they're just going to deny all of them if Kwong is appealed. I'm concerned that legitimate 843 requests that are not Kwong related are going to go the wrong way and get stuck. So you want to be very careful here. Always, always, always. Certified mail, electronic return receipt requested. Some of these things may sit for years. We don't know. The NTA and other groups have recommended the IRS throw together some sort of portal. And then if they're going to do that, make an announcement. Tell all of us not to file Kwong on paper. You're going to go to irs.gov/Kwong and enter this data. Let's see what happens. Would be smart if they did that. Certified mail is the way to go. So again, the National Taxpayer Advocate gives you this advice on how to follow and how to prepare them. We're using electronic software. Tax Help software does help a little bit with pulling this. It's got some reports, but of course they're saying it's not perfect. It's close. Use it as a guide, but do your homework. Here's some advice on priority screening of clients and who you want to have. We have a number of late international information return penalties that we're going to work on. And again, some of this is reiterating. Don't forget certified mail. Preserve all these documents that you have. Preserve proof that you mailed it is the most important thing. So get those forms in early. Make sure that the certified mail item gets there. And yes, this is going to be one of those few times where we tell you, if it doesn't get there and you're not sure, file it again ahead of the deadline. Yeah, what do you want to do with your engagement letter? My last item there. Of course, all the returns are already out, but our engagement letter is going to document what people want, what they don't want, and advise them of the deadline. And we're going to try and chase people down if they're not interested, just to tell us not interested, or that they're going to do it themselves. They're going to find out themselves how to do it. Okay, so have you screened your client base for these yet? You should. You want to do that soon. I think the IRS phone lines are going to get jammed up. All right, so on some of these, is the refund amount determinable that you can file a formal claim? Probably a lot of them are. Some of them might be a protective claim because the item is still open. Do you have a protocol for certified mail? We do. You should. Okay. All right. Now, next piece, this third piece here, I was excited about. So Ken Keyes, the Assistant Secretary of the Treasury for Tax Policy, spoke to us at the fly-in day. He was interviewed by someone from the lobbying firm. So I'm going to give you, these are my notes. So if there are any mistakes here, they are mine and mine only, right? These came from my notes, but I was really paying attention. And there are one or two really neat tidbits in here. So OVA, this is some of the implementation they talked about. They had a roadmap before enactment of the law. They had already been working in the background. They knew there was going to be a big law, so they were sort of ready to go, which is why they were able to open pretty much on time this year. They identified required guidance items. They built out the timelines, and that some of these things had immediate priority, such as the things that were retroactive to January 1st. Now, at the time, Mr. Keyes had a dual role. He was acting IRS Chief Counsel and the Assistant Director at Treasury. So, on the one hand, that poor man must have had a day off. On the other hand, it was very tightly integrated and low friction in putting things together and communicating because he's running two important jobs at the same time. Filing season opened, in their opinion, on time, faster refunds, and they keep citing this 500 million people went to the website this year, the irs.gov, versus last year, 300 million people. They're very excited about that increase in use. It must be their TikTok account sending people there, right? irs.gov TikTok. Treasury prioritized, this wasn't that exciting to me, but to know this, but they put stuff out in order. They thought FAQs, Q&As, first notices, then proposed regs, and then where possible, final regs. And they had this 1 year standard, year one standard. A number of things they told us, do your best, right? So think of that as all those W-2s where we didn't have codes this year, right? As long as you were trying, that was probably a good thing. And it's interesting, we part of the lobbying that we did is I went to one of my senators, and 4 congressmen, one of whom was mine, and 3 others for which people were traveling with us had, they were the constituents. And as one fellow we spoke to had told us that we were talking about congressional inquiries from taxpayers about tax matters, and he said couldn't believe how many times he had to explain to people why the tax preparer was correct in either not allowing them no tax on overtime or why the calculation was correct. And as I've been saying since the fall, people heard no tax on overtime if they made $20 an hour got a $10 premium for $30 when they worked overtime hours. They all heard my $30 is not taxable. They didn't get my $10 isn't taxable. And he said over and over and over they were explaining this to people. Thought that was quite interesting. And one of the things that we actually addressed was NAEA wants a level of certainty with the OBA final rules, and they thought that we should have all the 2026 rules in place by December of 2026. And we all talked about that change that came in April of this year on the deduction for no tax on tips with respect to the self-employed. How many of you were scrambling in April? Oh man, are any of those returns wrong? And we're rolling back to make sure everybody that we took no tax on tips with a Schedule C, that we got it correct. And we did. But we don't want that this year, right? We want things to be a little bit better. And here was the issue, right? They got that out early. They were proud of themselves for getting out early, and then they made that one change. Overtime deduction came out early. The senior deduction, I don't know how much guidance we needed on that. 32 million people claimed it. They're saying maybe some people didn't claim it, but 32 million people claimed it. All right, and these weren't planning items. They knew that they knew this stuff should be automatic or mostly automatic. Trump accounts. They love their talking about their Trump accounts. Government contributions of $1,000 per child is going to be triggered when you file the return. So far, 5 million filings to open the accounts. 1 million qualified for the $1,000 benefit. Now that's interesting to me because that means a lot of folks are looking for that Michael Dell money or planning to do this. So before I could ask the question, somebody else said, what about the value of this whole future interest thing? In other words, there's no way to get the money out once it goes in. So that's money that I'm going to get in the future. It's a gift of a future interest, which even if I'm under $15 million of lifetime gifts, requires the filing of Form 709. We've been telling people since the beginning, open the account, get the $1,000 if eligible, get the Michael Dell money, $250 if your children are under age 10, and the average sum threshold of income is $150,000 or less, the average. Now, when we were out in speaking about this in Las Vegas, Donna Byrne was sitting there with nothing better to do and ran this through all the zip codes in Nevada, in that county, the Las Vegas county, and came back with only one zip code was too high. Every other zip code would have qualified. So most people are going to get this Dell money and some of this other money. So folks are out there doing this. So anyway, we said, but don't put your family money in yet. Well, his exact reply was, we knew about this and we didn't think it would be such a big deal. Now, does that mean they thought that they're going to fix it and we'd be okay with it? And, or did they think we weren't going to notice? Either way, it was indicated that there is going to be a legislative or regulatory fix to give us a carve out like we have in ABLE accounts and 529 plans. In other words, it won't be a gift of a future interest and they will legislate it accordingly. So that'll be great. I thought that was the most exciting part of the days I was there. So, OBA made significant modifications to the IRA 2022 individual retirement account. I'm sorry, the Inflation Reduction Act energy credits. I hate that IRA name. So they need a lot of cross-agency guidance to do the final regulations here, and they're nowhere near having them ready. So the churn is ongoing. And, positions we might take now could carry interpretation risk. They think there's going to be high audit risks. We'll see what happens. One of the things we were talking about this week with the lawmakers was that IRS technology issues. And Treasury and the IRS are focusing on increasing system capability, not the number of people they have working there. So filing systems are built 12 months ahead of the filing season. So Mr. Keys said that AI is the future of the IRS, and they have a significant investment underway. And again, he said for the second or third time, our website went from 300 million to 500 million this year, and it's a good thing, I guess, right? That means the average taxpayer was there 3 times. Expect more automated matching, faster CP2000 notices, increased digital enforcement. Now, if they don't do the digital enforcement and they can't get it to work, it's going to limit how many notices they can send out. That's been their problem with everything, even on the existing legacy systems. They can identify more likely problems than they have people to handle, because they know if we send out 1 million notices, 200,000 aren't going to answer and are going to go to collection. 100,000 are going to write back and say you're out of your mind, right? So they're going to have to be able to handle all of these notices. What are they going to do? They know how many are going to a pretty good percentage. They know how many are going to end up in collection. Do we have enough collection people to handle this? How many are going to write back or call back, and do we have the capacity to handle that? Does it need its own phone line or its own department or special training of those employees? They already know this, so they're limiting how much goes out to avoid disasters. If they switch to digital first, will the initial response go to the AI tool, right? Could be an exciting time coming up. So they have a compliance crackdown. They don't want gray areas anymore. They're looking at conservation easements, captive insurance arrangements. We know that. And they've been winning. 40% accuracy-related penalties are being imposed here with minimal room for someone to say, I didn't know any better. Promoter scrutiny and transactional abuse enforcement is increasing. Ruben Valdez told me that he's involved with a couple of law firms under Covell letters, that he's helping with some large-scale promoter audits, which is kind of exciting, too, to hear these things going on. So Mr. Keys said that a lot of taxpayers don't understand their litigation exposure when entering these transactions. And there are other things, too. Same thing where if it's too good to be true, think about it twice. And is there exposure to us? Maybe. Make sure you document the advice, whose advice it was, whose idea it was, and what are you doing? Coming up in the pipeline, they're working on the corporate AMT, transitioning IRS notices to proposed and final regulations. Remember we said they had that little pipeline? There's a lot of complexity here. Continued OBRA provision implementation. Guidance issuance is ongoing. We're hoping they get it out by December, all of it by December. We're looking at transaction abuse, investor level enforcement, and promoter penalties. They want to stop people from promoting. And I've mentioned this before, that the Section 121 home sale exclusion, that dates back to the Clinton administration. So $250,000 and $500,000 gain exclusions, while they still sound generous, they were a lot more generous 20 years ago, almost 30 years ago now for Clinton. So I think you're going to see something happen here. Maybe they'll get indexed for inflation. Maybe they'll just boost them up. I don't know. But they're aware of what's going on. They're aware of what's happened recently. Okay. Trump account workflow. Do you have this in place? Do you have any clients in conservation easements or captive insurance arrangements? And is there risk exposure you need to do? Should they be looking at qualified amended returns? Should they be speaking to an attorney now before someone comes looking for them? And, should you be telling people to have IRS accounts ahead of, head off any problems? It's funny. We asked 5 congressional employees, and only one of them had an IRS account. 3 of them had paid professionals doing their tax returns. It's very interesting. That's 60% of the ones we spoke to. Thank you for joining me today. International Tax Conference is coming up. I would love to have you join us in New York. Come to our mixer, hang out in class with these intelligent people. If you're not a subscriber, consider becoming a subscriber. lots of content. And I just want to close with hard work will pay off. That's why you're doing this. That's why you're here. I hope you had a great week, and I hope you're not working this weekend. This is the time of year to get out with your family, get out and do something enjoyable. All right? So please do that for me. I'd appreciate it. Thank you again for joining us.